All right, we're back online. With us today is Satya Swarup Das, and he is an experienced product leader specializing in B2B and B2B to C solutions within the banking and financial services sector. He has a proven record of leading cross functional teams. Satya has extensive experience in building innovative products from the ground up and modernizing existing solutions. Today, he will be sharing with us AI revolution, driving transformation in financial services. And with that, Satya, the floor is yours.
Thank you, Joachim. I lost some of the time in the technicalities, but I'll quickly run into it. Um, so here is what I'm trying to cover today about banking and financial services and the impact of AI into it, especially with the Gen AI's advent from late 2022 to 2023 earliest. So what I'm going to cover is this about some kind of introduction about what does it mean to banking and financial services, the past, evolution, present to future, where we are going. Okay. So let me get started. So AI is not new. Predictive AI has been there for some time now. It's not new. There has been experimentation and then progress on that as well. But what has changed now is that with generative AI coming in, the space has got revolutionized drastically. And because of that, early 2023 onwards, we are seeing a sea change in the technology adoption in this area. And what we see is that there is something new on the table which has come in from generative AI's perspective, and combined with predictive AI, it's opening up a lot of doors and opportunities for future. And there is significant change that we see, which is envisioned in terms of the new technologies impact. And there's limitless opportunity and possibilities that we see, and it is across industries, not only to banking and financial services, but across industries. So what has changed here is that this technology earlier in its predictive form was not very accessible to everyone, but now it has become accessible to all of us. So we don't have to be a data scientist or data expert to actually access and play around with it. So it's there in all our hands. So with that, what is required to be understood is that one of the leading figures in AI space, Andrew, actually said that artificial intelligence is the new electricity. Okay, so what does it mean? Let us see. How do we actually perceive AI in its form, with especially generative AI coming in? So I would say it's more of a general purpose technology, and it is not something which is a very isolated technology which is going to be affecting one area or the other, or sub area of the other. It's actually a technology which is going to be involving or impacting a lot of our life going forward and across sectors, as we just discussed. I want to show you a short video of what general purpose technology actually moves. Are you able to hear it?
Yes, it's audible. Yep. Actually, it's partially audible. I'm getting static. One thing we can do is we can share the link to the video and have people watch it later. That's okay.
Yeah. Okay, so I'll give the link which is there here. So what it talks about is that the evolution of general purpose technology, or what we conceive or perceive rather as a general purpose technology, is that technology which is more versatile, widespread. It has widespread usage and impact, and gives us innovation to be carried out and find out new possibilities and things like that. So I'll not go detailed into it. Think about electricity when it came in its original form, probably somewhere in the early 1800s to this point in over 200 years. There's been a lot of impact that it has made to our lives, right? So somebody is trying to generate electricity, somebody is trying to distribute it, and so on and so forth. And numerous changes which have come in terms of appliances and conservation and things like that. So the AI, with Gen AI coming in of late, is going to be in that space where it is going to affect our lives for several years or decades coming together, or maybe centuries. So our way of life is going to change. That's the point I want to drive here. So why AI? And let's look at it from a banking and financial services point of view more rather than in a generic technology point of view. We as human beings, especially in the banks, running for several years, decades to centuries, we have collected data. The customers are now exposed to social media and devices like IoT, and there's a lot of data that we have generated. Now the next step for the human race is to consider how to utilize this data. So, are we not utilizing the data from the past? Yes, we were. But now with the advent of Gen AI, especially, there is data interpretation and understanding and finding results out of it, summarizing it, and making it more useful is becoming a lot more easier and faster. That's why we are in this era. So what McKinsey says that companies who are leveraging AI they're having 35% faster decision making process. So can banks be far behind? Can you ignore saying that no, I don't want to do 35% or whatever? I mean, faster decision making. That's not possible. You have to be competitive as a commercial bank or financial services institution, and you have to be adopting AI. So it's going to impact definitely the banks. And what customers are demanding on the other side is more personalized. So nobody now is willing to actually take a normal process or a common process which is not applicable to them, but for a general public at large. So people want to know what is there in it for me, right? So personalization is the key. So with that, what is coming in is that AI can definitely augment those possibilities which is there. But right now, let's look at what is going on in the financial services side as well. What trends that we see? There is definite shift from product-centric banks to customer-centric models. The banking's business model is changing. Regulation and compliance are demanding real-time data analysis. Gone are those days when you say that, okay, I have a couple of days gap between my data actually which is received to actionizing. Okay, so those days are gone. So we have to be quite real time to capture fraud and other things which is there. So advancements in the technology in terms of machine learning algorithms and natural language processing is actually making it faster and easier. And cloud adoption and the cost of data, which is reduced significantly over the decades. Now it is possible to actually hold data in multiple places and then find meaningful outcomes out of it. So AI can definitely influence all these areas of the trends that we see in financial services. So it is getting connected there. So now, what does AI actually mean to financial services? Let's go a little bit deeper into understanding banking and financial services. So banking, I mean, it's not that banking we do for fun. Nobody says that, oh, I did 5 fund transfers and I'm very happy with it. And or somebody says, okay, I went through a mortgages application for some hundreds of pages and I felt good about it. No, there's friction by definition in banking. We do it, I would say, reluctantly when it is required only. So when such a sector is impacted by AI, it has a different meaning. So what banks have to be balancing about is that whether I apply AI for everyday use, like increasing productivity efficiency, or something which is very innovative and new to the customers to give, which can be a game changer in the market from the business point of view, competition point of view. The other question is about, should I apply it to inbound activities in the bank or outbound activities in the bank? Should I be creating repeatable processes and to augment my backend, or should I be doing personalizing customer offering to have the front end channels to be augmented with that? So no matter what we do, what we have to understand fundamentally is that there is one word which is there at the bottom of any banking financial services offering. That's trust. Okay, when any technology, any offering which is eroding the trust level that the bank has with their customers, they're not going to adopt it. So this technology has to be up to that level of trust building, and that's where the biases and the hallucinations and other things have to be completely out of it, and the technology has to be trustworthy before banks actually have to be taking it forward. So experimentation and other things are going on at this point in time, but let's look at what is the power of AI first of all. So McKinsey again says that the industry across, I mean not banking financial services, across industries, if you see on the figure that I put in there, it's about 2.6 to 4.6 $4 trillion is the industry revenue that they're expecting from AI or related products and services, which is a huge number. Let's look at banking. What do they say? So banking is going to be probably having a 200 to 300 billion industry revenue generation across the processes which are listed on the right hand side. And it's about 3 to 4.5% of the current industry revenue which is there. So which is a huge number to start with, and it can only increase in future. Okay. So AI, again, I mean, this is one of a Deloitte's current analysis which I put in there, from strategy to risk to operations to customer and clients and sales, right? Everywhere there is AI impact. And from the supporting function side, also from technology to data to finance, HR, legal, everywhere the applicability is going to be there. What you see here is the highest potential one is the green dots or the triangles which are there. And you can look at most of them which are there are in the sales operations side or in the data analytics side. Okay. With that, let's see, how this, with all this discussion, let me move into taking you through how AI is going to be a game changer in financial services, because we discussed about that in the initial days. So again, I'm putting another Deloitte recent analysis of 2024, a very current one. So what they've defined the banking financial services to be in 3 types of games. So game 1, game 2, game 3 that you see in here across a scale of time versus value potential. So the game 1 was classic banking. So for example, the traditional banks which had the same processes, they were trying to do it at a lower cost, had a different model earlier. Game 2 is about digital banking, where probably the fintechs, neobanks are coming in, and they're completely having new processes, but the same business of banking is having new processes, new ways of doing it, and that's what was there. Now with AI's advent, they're expecting that the game, that game is going to be further advanced into something called as a game 3, which is intelligent banking. What does it mean? It can open up new businesses, new strategies, probably new services, products, and ways of doing business and things like that. So these are not different from one another. You would see that game 1 is a subset of 2, and both of them are subset of 3. So it's expanding that horizon with AI into new possibilities, strategies, segments, products, and solutions. So hence, it's going to impact significantly in the banking and financial services. So in interest of time, let me take you through the 5 use cases that I think are going to be most impacted or the most adopted ones, or at least the experimentation of that is going to be starting. And some of them, the bigger banks have already started doing that. So number 1 is about fraud detection and prevention. Okay, so real-time monitoring of transactions, reducing false positives are going to be definitely required, because those are cost-consuming activities which are there, and plus reputation and fraud risk which is there. So let me give you an example. So HSBC's AI use case about fraud detection, they have actually run it for 689 million transactions globally across them. And what they've reported is about 35% reduction in fraud loss, which is a huge number, right? So, and the detection rates have gone up by 50%, which is a huge number to reduce fraud and control fraud rather. The next one is about risk management and credit scoring, where I think AI is going to be definitely playing a role, and banks are already started experimenting with it. So now there is more data. There is there is traditional data which used to come from the scoring agencies and things like that. Now we have customers have more data, social, behavioral, and things like that, right? So including all those, the dynamics of credit scoring can change. The underbanked population, can they have a credit scoring? Who do not have a credit scoring, how do we actually lend to them? These are the questions which are there, and for that AI can definitely be helpful. Case study again, Zest AI and Freddie Mac in the US actually did their model and then ran it, and the outcomes are very good, very positive. 20% increase in loan approvals, 30% increase in defaults, and 15% improvement in accuracy, which are for a bank of size, for an organization of the size of Freddie Mac, which handles a lot of mortgages in the US. It's very, very, I would say, good numbers to look at, and big numbers to look at this point in time. But it will only increase and go into other banks as well. Personalization, I talked about it a little while earlier, but there's one area which I think is going to be much more of the interest because it's more customer facing. And the chatbots, the personalized assistants, which are being experimented, especially with Gen AI coming in, is having natural language processing to having customer interaction. Personalization, taking it to the next level of hyper personalization of financial products and services to exactly cater to what the customer needs and not give a very standard process out of which say 30-40% might not be even useful to them, right? Case study again, Wells Fargo's AI-powered chatbot. The report is that 60% increase in mobile banking interactions have come because of that, and 20% rise in customer satisfaction score is there. So huge numbers as compared to a bank stature of Wells Fargo, which is a global bank. The fourth is about RegTech, because regulations are intrinsic part of banking. You cannot ignore regulations and have to be complying by that. Otherwise, the business doesn't run. The regulators stop it. So robo-advisors and automated financial service advice, portfolio managements, automations and things like that can come in. I'm not saying that everything is going to be 100% automated, but as the technology progresses, at least you have a companion to bank on, saying that if you do 90% of the job, then the human can do the rest 10% or something like that. So even democratizing your wealth management and of retail investors, high net worth individuals can be also automated with this. Again, I'll just keep the case study probably and have a look at it, Citi's compliance platform. Then finally, robo-advisors, right? So that's where most of the industry talk is about, having robo-advisors for customizable real-time financial insights and planning. Betterment's AI is one of the most talked about wealth management robo-advisor platform, which has about tax loss of saving about 1.77 annually, which is a big number for considering 730,000 clients that they have, that they are managing, the customers that they're managing. Okay. So in nutshell, what is happening is, you would have seen all the case studies that I've given is about the biggest banks in the world currently, because they have data, a team, they have access, they have technology, they have money. But what about the other underbanked small banks operating in those areas? I think AI is going to definitely impact them, because there is 1.4 billion roughly underbanked adult population. Okay. Credit data is not available. Can we put alternative data to have from social, behavioral, and other data to take and put models to that and create products out of it, banking products out of it, to have your farm insurance, lending, and things like that. So that's one more area I want to highlight here, that it's going to be definitely impacted, and there are companies which are working on it, and we can discuss about it if you have time, but not at this point in time. So what are the risks in adoption of AI? Biases, model complexity, data quality and privacy, and security threats. These are the four major topics which are there, which can actually treat the customers unfairly or have a lack of transparency, and improper predictions can lead to AI's lack of success rather. So these are the challenges which they're facing, and the mitigation strategy is about putting a governance framework, explainable AI techniques, and diverse training data, and probably looking at security protocols and resilience framework, which also is coming up from regulators' side to protect that. I don't have much, I'll just conclude in probably 2 minutes. So where are the banks at this point in time? So what is the boardroom discussion which is going on? So what do we really want as a bank? Okay, so what are the right target operating model? Who should create it and drive it? These are the questions fundamentally they have to answer first internally, and then try to see how to adopt AI. Leadership buy-in or for business case, is it there? Is it the bank really interested in do that? Legal composition, compliance departments, are they aligned? Internal versus external application, where do we apply first? Okay, what is the risk associated with it? So the main discussion is about whether we go from data to decision or decision to data. So I would always recommend that data to decision is a very wrong approach, because you can't say that, okay, show me the data, I want to make decision out of it. No, it doesn't work like that. If you have to go strategically, you have to define your use cases, define your hypothesis, and then include your data team and try to find out how to make decisions out of it. So that's the recommended approach. But I'll not go into details, but the organization has to come together from strategy, AI strategy especially, and the overall strategy of the organization, risk compliance, infrastructure, people, and culture. Unless they put together, you cannot proceed as a bank with AI adoption. And that's where some of the banks are struggling at this point in time. What are the challenges? Lack of strategic direction, cultural resistance. Even if you have all the amenities, are people like-minded to do that? Are they ready to adopt the technology? The return on investment versus experimentation, because in AI, you have to fail and fail first, because there is no right and wrong pre-approved or pre-qualified models which are there. You just apply and then you get the results. It's not there. So experimentation has to be the way, and that's why strategy and culture plays a lot of role. Weakness and skill gaps. Do you have the right resources once you have the strategy and culture in place? Okay. And we have to be prepared for rapid changes in technology, because what we have now is how we have now, right? So we don't know what is going to come in future. So banks have to be also factoring in that, because you cannot build a model that you have to change everything in future. So that's another risk, which is or challenge which is there. All that we discussed till now is about banks and how do we take it forward. But spare a thought for the customers also. This is what one of the published articles on September 30, very recent one, which Kathleen Mullen wrote, is about banks are excited about AI, but their customers are not sure. Even as a customer, I don't know what my bank is going to offer me. How am I going to react it? Absolutely no idea, but it will evolve. As you said, in a general purpose technology, it takes time to come up with different players into the market and take it forward. Last one, where will AI take BFS industry from here? Here is my take. I think AI will be definitely the integral part of BFS landscape. We cannot ignore it. With its complementary value, it will soon become mainstream, but experimentations and others are starting mainly from the big banks in the world, but others are going to follow, and the ecosystem will develop. BFS industry will definitely have predictive and generative, a hybrid model of that. You cannot go one way or the other for like any other industry as well. Point solutions can be tactical, knowledge-driven decision strategic models can come out. So both areas you see applications in future, and it will definitely reimagine the value chain that we saw earlier, and newer ways of business is going to be there. So this is what Richard Turin, best-selling author of Cashless, said few weeks back, probably, saying that banks are not rushing into adopting AI, and especially Gen AI, which is looks like a negative statement, but that's the reality at which we are now. So experimentation and failing and learning and making the models applicable and the use cases more refined is going to be there. So I'll leave you with a thought here, and if there is time, probably Joachim can have questions. Otherwise, happy to discuss anything outside and with the industry experts there.
Satya, this is an expansive deep dive into this very, very large topic. And I think we're going to have to do another entirely different session just to cover some of these things in greater detail. But for now, thank you very much for sharing your expertise. And I invite anybody who wants to connect with Satya and discuss these further. So thank you very much. We're going to take a very brief break, and then we're going to come back for the next session. So
thank you, Joachim. Thank you for having me here.
thank you, Satya.